Your bank is watching you right now. Every cash transaction you make, every transfer you send, every withdrawal you process is being tracked, reported, and potentially flagged to the government as we speak. And if you think I'm exaggerating, stick with me for the next few minutes because what I'm about to reveal will completely change how you think about your financial privacy. New rules just went into effect, and millions of Americans have no idea their money moves are being monitored. Before we dive deep into this, I need you to do something critical right now. Hit that subscribe button and turn on notifications for Benefit Vault. Why? Because this information is being suppressed, it's being buried, and you need a channel that's going to give you the unfiltered truth about what's happening with your money. Smash that like button too, because the more engagement this video gets, the more people we can warn about what's coming. All right, let's get into this. Because Big Brother isn't coming. Big Brother is already here, and he's watching your wallet. The headlines you might have seen recently are talking about the IRS cracking down on cash transactions, banks being required to flag transfers, and new monitoring systems going live right now. Some of what you've heard is true, some of it has been walked back, but the reality is actually more complex and in some ways more concerning than the headlines suggest. So let me break down exactly what's happening, what rules are in effect right now, and what this means for your day-to-day financial life. First, let's talk about the $600 rule that everyone's been freaking out about. You've probably seen the alarming headlines saying that the IRS is going to monitor all bank transfers over $600 starting immediately for anyone who regularly uses apps like Venmo, Zelle, PayPal, or Cash App to send money to family, pay friends back, or handle any kind of personal transactions. This sounded like a massive invasion of privacy. And honestly, some of these concerns are completely valid because while one rule got rolled back, several others just went into effect that are arguably even more invasive. Here's the truth about that $600 threshold. The plan to force payment apps to report every user with over $600 in transactions was originally part of legislation passed back in 2021. But after years of delays, public outcry, and serious pushback from privacy advocates, that specific rule has been officially rolled back. The threshold has been retroactively raised. According to the current IRS guidelines for the 2026 tax year, the reporting requirement for Form 1099-K has reverted to the old standard. That means $20,000 in payments and 200 transactions. So if you were worried that sending your grandkids $601 for their birthday would trigger an automatic audit, you can breathe a little easier on that specific point. But here's where things get interesting, and this is where you need to pay very close attention. Just because that one rule was rolled back doesn't mean the government stopped trying to monitor your money. In fact, several new rules just went into effect that are going to impact how your financial transactions are tracked and reported. And some of these are flying completely under the radar while everyone was focused on that $600 threshold. Let me walk you through what's actually happening right now. The first major change involves the $2,000 threshold for non-employee compensation. While the $600 rule for payment apps was rolled back, new legislation did change the rules for business owners and self-employed people. Starting January 1st, 2026, which means this is already in effect as you're watching this video, the threshold for Form 1099 NEC, that's non-employee compensation, has shifted from $600 to $2,000. What does this mean in plain English? It means if you run any kind of business, if you're a freelancer, if you're self-employed, if you hire contractors, any single transaction of $2,000 or more must now be reported and monitored by the IRS. Now, some people might say, well, $2,000 is higher than $600, so that's better, right? Not exactly. This is specifically targeting business income and contractor payments, and $2,000 is still a pretty low threshold when you're talking about business expenses. If you hire someone to do work on your house, if you pay a contractor for services, if you're running a small business and paying vendors, you're going to hit that $2,000 mark pretty quickly. And every single one of those transactions is now being reported directly to the IRS. But wait, it gets even more interesting. There's now a 1% remittance tax on international cash transfers that just went into effect. This is huge, and almost nobody is talking about it. Under new provisions that became active this week, a 1% federal excise tax now applies to any international money transfers where the sender uses cash, a money order, or even a cashier's check. Let me give you a real-world example so you understand how this works. If you walk into a retail location to wire $1,000 in cash to a relative living outside the United States, the IRS is now going to collect a 1% tax. That's $10 in this example. But more importantly than the tax itself, they're going to record your transaction and flag it in their system. Every single international cash transfer is now being tracked. They know who's sending it, they know how much, they know where it's going, and they're keeping permanent records of all of it. Now, before you click away thinking this doesn't apply to you because you don't send money internationally, hold on. Keep watching because there's another rule that's going to blow your mind, and it affects millions of Americans who live nowhere near an international border. Drop a comment right now and tell me if you knew about any of these rules before watching this video. Seriously, I want to know if this information is new to you or if you'd already heard about these changes. And while you're down there, share this video with your friends and family because I guarantee most people have no clue this is happening. The mainstream media isn't covering this the way they should be. You're getting the real story here on Benefit Vault, and that's exactly why this channel exists. Now here's where things get really concerning. There's a government organization that most people have never even heard of called FinCEN. That stands for Financial Crimes Enforcement Network. And FinCEN has just issued something called a Geographic Targeting Order that requires money services businesses along the southwest border of the United States to file currency transaction reports for any cash transactions above $200. Yes, you heard that right. $200, not $2,000, not $600, $200. This applies to transactions between $200 and $10,000. Why $10,000? Because transactions over $10,000 are already required to be reported under existing laws. So what they've done is create a new reporting requirement for anything over $200 in specific areas. And $200 is nothing. That's grocery money. That's a utility bill. That's a tank of gas and a trip to the store. The official reasoning behind this order is to enhance anti-money laundering efforts and counter the financing of terrorism by identifying and deterring illicit financial activities, particularly those linked to drug cartels and other criminal organizations. Now, I'm not going to sit here and say we shouldn't try to stop drug cartels or criminal organizations. Of course we should. But here's the problem. This dragnet approach doesn't just catch criminals. It catches everybody. We're talking about millions and millions of regular law-abiding Americans who happen to live in certain areas or who happen to make routine cash transactions. This applies to money services businesses located in designated counties, specifically 30 different zip codes in California and Texas. Covered transactions include any deposit, withdrawal, exchange, or transfer involving currency amounts over $200. If you live in one of these areas, if you send or receive money from someone in one of these areas, your transaction is being flagged and monitored. Reports are being filed about your financial activity. And a lot of times this is happening automatically. The app you're using, the bank you're working with, the money transfer service you chose, they're filing these reports whether you know it or not. And if they don't file these reports, they face stiff penalties and fines, so they have every incentive to over-report rather than under-report. Here's what really gets me about all of this. The government didn't put that $600 rule into effect, so everyone celebrated like privacy was protected. But what they actually did was even more invasive in some ways. They put a $200 rule into effect for specific geographic areas. They put new reporting requirements into effect for business owners and contractors. They put a tax and tracking system into effect for international money transfers. All of these different rules are going into effect, all designed for the government, the IRS, FinCEN, and various other agencies to monitor your money, your cash, your transactions, your withdrawals, where you're sending it, who you're sending it to, how much, and when. If you're still with me, thank you for watching this far. This is exactly the kind of in-depth analysis you're going to get here on Benefit Vault. Make sure you're subscribed because we're going to continue following this story as it develops. Hit that like button if you appreciate getting the straight facts without the spin. And comment below with your thoughts. Are you concerned about these new monitoring rules? Do you think this is necessary for security, or do you think it's government overreach? I want to hear from you. So here's the big question everyone should be asking. What happens with all this information they're collecting? What are they going to do with these reports and these flagged transactions? Will money be frozen? Will accounts be stopped or suspended? Will people face audits based on perfectly legal transactions that just happen to cross certain thresholds? Nobody really knows yet, because these rules just went into effect. We're in the early stages of implementation, and we're going to have to wait and see how aggressively these rules are enforced and what the real-world consequences are. But here's what concerns me, and this should concern you too. There's going to be massive amounts of information about people's bank accounts, their spending habits, their financial transactions flowing to multiple different government agencies. And anytime you have that much personal financial data being collected and shared, there are risks. Risks of data breaches, risks of false flags and innocent people getting caught up in investigations. Risks of this information being used in ways that were never intended. A lot of people are rightfully concerned about the privacy implications of all of this. Think about it from a practical standpoint. If you're a small business owner who regularly pays contractors, you're now on the IRS radar for every payment over $2,000. If you live in certain parts of California or Texas and you handle cash for any reason, you're potentially being flagged for transactions over $200. If you send money to family members living abroad, you're paying a tax and being tracked. Layer all of these systems on top of each other, and you start to see a picture of comprehensive financial surveillance that would have been unthinkable just a few years ago. Now, I want to be balanced here. I'm not saying all monitoring is bad. I'm not saying we shouldn't have any rules. Obviously, we need to combat actual financial crimes, money laundering, terrorist financing, and other serious illegal activities. The question is whether these broad, sweeping rules that impact millions of regular Americans are the right approach, or whether there are more targeted ways to go after actual criminals without creating a surveillance state for everyone else. Here's my advice for you moving forward. First, be aware of these rules. Know the thresholds. Know what transactions are being reported. Second, keep good records of everything. If your transactions are being monitored and flagged, you want documentation showing that everything you're doing is legal and legitimate. Third, consider how you structure your business payments and personal transfers with these new rules in mind. I'm not suggesting you do anything illegal or try to evade reporting requirements. I'm saying be smart about understanding the system you're operating in. And fourth, stay informed. These rules are new. They're going to evolve. There will probably be challenges, changes, adjustments, and new developments. You need a reliable source of information to keep you updated, and that's exactly what Benefit Vault is here to provide. We're going to keep monitoring these changes, breaking down what they mean, and giving you actionable information you can use. Share this video right now with everyone you know who handles money, which is basically everyone. Post it on social media. Send it to your family group chat. Text it to your friends. This is information people need to have, and it's not getting the coverage it deserves in mainstream outlets. By sharing this content, you're helping protect people's financial privacy and keeping them informed about rules that directly affect their lives. The bottom line is this: financial surveillance is expanding rapidly. Some rules that looked like they were going to be implemented got rolled back, but other rules that are arguably more invasive took their place. Whether you're sending a couple $100s to a family member, paying a contractor for work, or wiring money internationally, Big Brother is watching. Your transactions are being tracked, reported, and analyzed. This is the new reality of financial life in 2026, and you need to be aware of it. I'll continue keeping you updated as this situation develops. More rules may be coming. Enforcement patterns will become clearer over time. We might see legal challenges to some of these provisions. Whatever happens, you'll hear about it here first. That's the Benefit Vault promise. Real information, straight talk, no agenda except keeping you informed about things that affect your financial life. Before we wrap up, let me know in the comments what concerns you most about these new monitoring rules. Is it the privacy aspect? Is it the potential for false flags? Is it the sheer amount of data being collected? Or do you think these measures are necessary and justified? I'm genuinely curious about what the Benefit Vault community thinks about all of this. Your perspective matters, and I read every single comment. Subscribe to Benefit Vault if you haven't already, turn on those notifications, like this video, share it widely, and stay tuned because there's a lot more coming. Financial rules are changing fast, benefit programs are being updated constantly, and you need a channel that's going to keep you ahead of the curve instead of finding out about important changes after it's too late. That's what we do here, and I'm grateful to have you as part of this community. Thank you for watching all the way to the end. Your time is valuable, and the fact that you invested it in staying informed tells me you're serious about protecting your financial interests and understanding the world we're living in. Until next time, stay aware, stay informed, and remember that knowledge is your best defense in a world of increasing financial surveillance. Disclaimer: this video is for educational and informational purposes only and should not be construed as legal, financial, or tax advice. Tax laws and financial regulations are complex and subject to change. The information presented reflects our understanding of recent rule changes, but may not be complete or fully accurate as implementation details continue to evolve. Always consult with qualified tax professionals, attorneys, or financial advisors regarding your specific situation. Benefit Vault is not responsible for any actions taken based on the information in this video. Individual circumstances vary, and what applies in one situation may not apply in another.